G'day everyone out there, it's Michael Beresford here from OpenCore, back again after a short hiatus with our latest Property Wealth WOD, our workout of the day. We had a client night recently, just last week actually, in Melbourne and Sydney, and one of the things that we got some amazing feedback was around the market update and really where we saw the different capital city markets in Australia, where it made the best sense to buy right now. And let me preface by what I'm about to go through by saying, remember that we're not in property investments for a short win or a quick win. It's about a medium to long-term investment. We want it to work over multiple cycles, and 15 to 20 years plus is really what's going to get you the best outcome from a capital growth perspective. But in terms of where we're looking at the moment, so 4 main capital cities and where we see each of these markets at the moment. So you don't need to be Einstein to realise that Sydney is currently hot, been hot, growing steadily since around 2012, 2013. Some really good performance in Sydney. That's exactly where it's at the moment, but it's not where we'd be buying at present. So if we think about the last major growth curve, between 1998 and 2002, we saw dramatic growth in Sydney. It sat idle for the best part of the next 10 years, and then we've seen a really strong 4 years since. So the media's up in arms about Sydney's unaffordable and it's inflated and it's in a boom and it's a bubble, all of those kind of things. We hear that frequently, but really it's just a case of history repeating itself. What we don't want to do though is be buying at the very top of the market, because then we're waiting a good 10 years to see any major growth. So bear that in mind. Might give you some comfort to buy in a hot market, one that's been strong for several years. Not going to be the best recipe to get ongoing growth. Melbourne, been lagging behind Sydney by about 12 to 18 months, as usual. Definitely hot at the moment, a lot of activity and some really strong price growth that our clients and Melbourne residents have seen in Melbourne. Brisbane, very much heating up. The best way that I can summarise where we see Brisbane at the moment is that the differential between house growth and unit growth is very different. So houses up about 4.5%. Units are actually down, and that's again just I guess a case of supply and demand. So it's been in the media a fair bit. Large oversupply of apartments in Brisbane at the moment. Makes sense not to invest in apartments, and definitely not apartments in Brisbane. However, without a crystal ball to say which market's going to grow and when, one of the key, or two of the key, I should say, data points that we look at with respect to these markets are median house price growth and population growth. Now, with the medians, because of the growth in Sydney and to a slightly lesser extent Melbourne, Brisbane and Perth have been lagging behind. Okay, now the last time that we saw such a big differential between the Sydney median house price and the Brisbane median house price was back in 2001. So as I said, remember, between 1998 and 2002, Sydney saw dramatic price growth over 80%. And what we saw in Brisbane between 2001 and 2004 was a more than doubling of the Brisbane median house price. Okay, so again, if we think about where markets are placed, we don't know exactly whether they're at the top of the curve or the bottom of the curve, but Brisbane is well placed to see some growth over the next 3 to 5 years, in our opinion. In terms of where Perth's at, again, Perth's been flat, has been for some time, but we are seeing the kind of indicators that Perth's been on our radar for about 12 months. There are 2 key indicators that we've been looking at, and we're starting to see them trending in the right direction. I'll get to those in a sec. So in terms of, I guess, the major factors to bear in mind around these key capital city markets as we move forward, population growth easing in Sydney, purely due to the fact of affordability. If there are jobs available in Sydney or Brisbane or Melbourne, then typically that population growth will go to where housing is more affordable. Okay, so dropping off, or easing in Sydney. Population growth is super strong in Melbourne. So about 80% of all of the job creation that's happening in Australia is in Melbourne right now. That's obviously what's been fueling the growth in prices. I mentioned Brisbane before and two metrics. I talked about one being the median house price differential. The second one is the net interstate migration. Okay, and that's up 80% in Brisbane. So to use a simple example that most people could relate to, if you're a Sydney-sider and you have a job opportunity in Brisbane, then you could pretty much sell a median house in Sydney for say 1.1. You could buy the equivalent in Brisbane for 550 to 600 and pocket several $100,000 in difference and still be employed in the same job earning a similar income. Okay, so 2001, again, net interstate migration was dramatically up in Brisbane. So again, I guess some evidence of where we see it placed in the cycle. With respect to Perth, the two key data criteria we've been looking at with respect to Perth are unemployment rate, okay, and that's come down from the mid 6% down to 5.6%, which is actually the second lowest behind Sydney of the four main capital cities. And the other one is vacancy rate. So vacancy rate has been trending down as well since January in 2017. So there we go, guys. There's a lot more detail I could get into, but as a quick executive summary and a snapshot for where we see the markets, we'll be steering clear of Sydney. Melbourne's still got some potential due to how it's the time frame it's lagging behind Sydney. Brisbane has real potential, and Perth back on the radar, provided you can mitigate vacancy risk. Remember, we're investing for the long term, and hopefully that's given you some insight as to where we see the four capital city markets at this point in time.